The next chapter in my book deals with understanding taxes. Now, by a show of hands, how many of you in the room are very excited and interested in talking about taxes? How many? Okay, so there's just two of us. Okay, but I'm happy that you're here, but I'm even more happy that everybody else is here as well. The truth of the matter is, if I told you that the single best way to accumulate wealth, the single best way by far is to simply pay attention to taxes and tax planning, would that make you a little bit more interested? What most of us don't realize is how much of our money goes in taxes. So I'm going to answer that question that I asked before. Where did all your money go? How come at the end of the year you have barely any money left over? Well, not only because you may be spending money that you shouldn't be and living beyond your means, but I think the other main reason is the government, in one form or another, is probably taking half of everything you make. Currently, our federal tax rate, the top federal tax rate, is 35%. That's scheduled to go up January 1st. I don't know how many of you realize what's about to happen to each of you January 1st, but the top tax rate is going to go up to 39.6%. Now, what's frightening about that number is that's just your federal tax. Then you got your state tax. California, I think the state tax rate is about 9.6%. Back in New York, where I come from, it's almost 14% when you combine it with New York City. Those numbers alone have you over 50%. Then we have Social Security tax, SUTA tax, FUTA tax, various payroll taxes, excise taxes. You go out to a restaurant, you don't like the service, instead of giving a 20% tip, you give a 10% tip. But guess what? The government, they still take their sales tax on the full amount. I'm not sure what the sales tax rate here is in California, but in New York, it's about 9%. So my simple point to you is taxes, taxes, taxes. We literally get taxed to death. And then even after we die, if we're lucky enough to accumulate wealth, the government then takes even more taxes upon our death, a little something called estate taxes. So if you're not interested in taxes, and if you're the typical person who waits until April 15 and shows up to that tax guy here to do my tax return, you are selling yourself short big time. Because the planning that you need to do, the way you're going to save significant money in taxes, has to happen before the end of the year. When your tax guy meets with you, all he can do is prepare a tax return. That's the easy part. The hard part is coming up with creative strategies to minimizing your tax liability. In my book, I have well over 100 up-to-date tax planning strategies that, again, I would encourage each of you to look at and implement in your own particular practice. So taxes, taxes, taxes. You can minimize your taxes without lowering your standard of living. I don't think anybody in the room would mind paying $10,000 less in taxes. It's not going to affect your lifestyle in terms of what you're doing, but that could be the extra $10,000 you need to save for your retirement, fund your child's education, whatever the case may be. So taxes needs to be a more important part of everyone's life.